All right, America, buckle up, because what I am about to put on this whiteboard is going to make a lot of insurance agents in the United States of America real mad, and it is going to make you a whole lot richer, and that is exactly why you need to hear it. Here's the hook that should make your stomach drop and your wallet wake up. The average American family right now is paying about $400 a month for a whole life insurance policy because some guy in a nice suit told them it is an investment and it builds wealth and it is what smart rich people do. That same family could get the exact same $500K death benefit with a 30-year term policy for about $30 a month. If that family took that extra $370 a month and just threw it into a boring index fund inside a Roth IRA after 30 years, the whole life family has maybe $140K in cash value if they are lucky, and if the company actually pays the dividend they promised. The term plus investing family has over $680K in real money they can touch, spend, invest, leave to their kids. Same monthly payment, same protection when the kids are little, more than $500,000 difference. That is not my opinion. That is whiteboard math. That is math you can do on a napkin at a diner in Texas at 2 a.m. What is up, you legends? Welcome back to the channel where we talk micro business money moves for regular people in America who are tired of being broke and tired of being lied to. If you are new here, we help solopreneurs, side hustlers, barbers, nail techs, landscapers, pressure washers, Etsy sellers, Amazon flippers, truck drivers who started their own thing, moms building a business between nap times, keep more of what they grind so hard to make. Today we are settling the biggest scam debate in American personal finance, term versus whole life insurance. And we are doing it whiteboard style, so even if you flunked math in high school, you are going to get this, and you are never going to get played again. So picture this whiteboard with me. Left side, big red letters, whole life. Under it, we write expensive, confusing, locked up, low return. Right side, big green letters, term, plus invest the difference. Under it, we write cheap, simple, flexible, rich. Two paths, same hardworking American family, same paycheck, totally different retirement. Before we get into the 7 secrets most people get dead wrong, let me tell you why I care so much about this topic and why I'm a little unhinged about it. I got a buddy in Florida, 29 years old, 2 little kids, started a detailing business out of his driveway in the Florida heat. Super humble, super hungry. First time in his life he has a $10,000 a month profit. He is feeling like a king. He wants to do the right dad thing. He sits down with a guy from his gym who sells insurance. That guy shows him a fancy color chart, says whole life is how rich people in America build tax-free wealth. You can be your own bank. You can borrow from yourself. Rockefellers do this. My buddy signs up for $420 a month whole life because he thinks he is being responsible. 18 months later, his work van blows an engine, $6,000 to fix. He calls the insurance company and says, hey, I need to use my cash value. You know how much he had after paying in over $7,500, like $600. 600. He had to put that engine on a credit card at 24%. He almost lost his whole business. He called me at night and he was broken. That is why I am savage about this product, because it is sold to good people who are trying to do the right thing in America, and it punishes them exactly when they need money the most. So let us get into the 7 brutal truths that keep middle-class Americans broke and keep insurance companies in giant glass buildings. Secret number 1, whole life is not an investment, period. It is a terrible savings account wearing a Rolex. People love to say it grows tax-free and it never goes down and it has cash value. Yeah, it never goes down because it barely goes up. After fees, after cost of insurance, after commissions, after the company takes its profit, your cash value is growing at like 1 to 3% a year. You know what else grows tax-free in America? A Roth IRA. And a Roth IRA actually grows at 8 to 10% a year if you just buy a boring total market index fund and leave it alone. So why would you pay 10 times more to grow your money 5 times slower? That is like paying extra for slow internet. It makes 0 sense. Whole life tries to be 2 things at once, insurance and investment, and it sucks at both. It is like a spork. Sure, it is a spoon and a fork at the same time, but it is a terrible version of both, and you would never open a restaurant that only serves sporks. You are trying to run a real financial life in America where rent is up, groceries are up, gas is up, daycare is insane, everything costs more. You cannot afford to have your money growing at 2% while inflation is eating you alive at 4%. You are literally losing money safely. Term plus investing gives you real growth and real protection at the same time without the nonsense. Secret number 2. The be your own bank, borrow from yourself. Tax-free pitch is the biggest gimmick in American finance, and I am tired of hearing it on TikTok and Instagram. Let me whiteboard this because this is where they get you. You put $500 into your whole life policy this month. The insurance company takes about $350 of that for commission, fees, cost of insurance, profit. They put about $150 into your cash value. Then they say, congrats, you can now borrow that $150 tax-free and be your own bank. So you borrow your own $150 and they charge you 6 to 8% interest to use your own money. You are paying interest to access money you already earned and already paid tax on. That is not being your own bank. That is being your own customer and getting charged a fee to shop at your own store. And here is the part they whisper super fast and hope you do not hear. If you die while you have a loan outstanding, your family does not get the full $500K death benefit. They get $500K minus whatever you borrowed plus interest. So you borrowed your own money, paid interest on it, and your kids get less when you are gone. Now, how is that a wealth hack? How is that something rich people do? Rich people in America do not pay interest to use their own money. Broke people do. With term plus investing, your investment is just your money. You want 10 grand. You sell 10 grand of index funds. No paperwork, no waiting, no interest, no reducing your kids' payout. It is your money. You do not need permission to use it. The whole be your own bank thing only works for the bank. And the bank is the insurance company, not you. Secret number 3. The forced savings argument is insulting, and you need to stop letting people talk to you like you are a child. Agents love to say, well, Americans are bad at saving, so whole life forces you to save. First of all, that is condescending. Second of all, you do not need to pay a $4,000 commission to force you to save $300 a month. You can force yourself to save for free in literally 30 seconds on your phone, and it will actually work better. In the United States of America right now, every single brokerage app, Fidelity, Schwab, Vanguard, even Cash App, lets you set up automatic investing. Payday comes, $300, automatically moves into your Roth IRA, into a total market index fund. You never see it, you never touch it, you never spend it, same forced savings, zero commission, and you keep all the growth. Telling someone they need whole life to force them to save is like telling someone they need to hire a guy for $500 a month to stand in their kitchen and slap donuts out of their hands so they lose weight. Just do not buy the donuts. Automate your investing. Keep the $500. You are way more disciplined than you think because you are here watching a finance video at night trying to better your life while most people are watching reality TV. You got discipline, which you just need a system that does not rip you off. Now, secret number 4. You are not supposed to need life insurance forever. And this is the fear tactic that sells the most whole life policies in America. They love to scare you with what happens when your term runs out. You will be 60 years old, term expires, you have no insurance, you die, your family gets nothing, you were irresponsible. That only happens if you did everything else wrong with money for 30 years straight. Let us whiteboard real life in America. At 30 years old, you have a mortgage, you have 2 little kids, you have maybe $15K saved, maybe $40K in debt between car and student loans. You have no real wealth. If you die at 30, your family is toast without life insurance. You need a ton of it. At 60 years old, if you did term plus investing right, your house is paid off, your kids are grown and working, and out of your basement, you have $700K, $900K, maybe $1 million plus invested between Roth IRA and brokerage. And maybe your micro business is worth something. If you die at 60, your family does not need a $500K insurance check from State Farm or whoever, because you already left them $1 million of real assets that actually grow. You are self-insured. That is the whole goal. Life insurance is a temporary tool for a temporary problem. It replaces income while you're broke and building wealth. Whole life tries to make a temporary need permanent, so they can bill you forever. It is like wearing a cast on your leg forever, just in case you might break it again when you are 80. You are supposed to heal. You are supposed to get stronger. You are supposed to grow out of needing it. Micro business owners understand this better than anyone because you live in seasons. You do not pay for snow plowing in July in Arizona. You pay for what you need when you need it, and then you stop paying when you do not need it anymore. Secret number 5. The fees are absolutely savage, and they are hidden on purpose, and this is where whiteboard math gets bloody. Let me show you real American numbers so it sticks forever. You are 32 years old, healthy, non-smoker. You want $500K of coverage to protect your family. Whole life quote is $380 a month. Term 30-year quote for the same $500K is $32 a month. Same coverage number on paper, totally different price, year one. Whole life guy pays $45, $60 for the year. His cash value at the end of year one is maybe $400 to $700. Where did the other almost $4,000 go? Commission to the agent, fees to the company, cost of insurance, profit, gone. Poof. Term plus investing guy pays $384 for term for the year and invests $4,176. Even if the market does zero that year, he has $4,176 of real value. Plus his family was protected. Whole life guy has $500. Who is winning? It is not even close. Year 3, whole life guy has paid $136.80 total. Cash value maybe $3,500. He is down over 10 grand, and if he cancels, he gets even less because of surrender charges. Term guy has invested $12,528 over 3 years, and with a little growth, maybe $13,500. He is up and liquid. Year 10, whole life guy has paid $45,600. Cash value maybe $3,000. Still down over 15 grand after 10 years of being responsible. Term guy has invested $4,160 over 10 years, and at 8% growth, that is about $63,000. He has double the cash value guy, and he paid way less for insurance. Year 20, whole life guy has paid $91,200. Cash value maybe $78,000. Still less than what he put in after 20 years of grinding and saving. Term guy has invested $835.20, and at 8%, that is about $205K, almost triple. Year 30, whole life guy has paid $136,800. Cash value maybe $160K if dividends were good and if the company did not cut them. So after 30 years, you finally have a little more than you put in. You average maybe 3% if you are lucky. Wow, what an amazing wealth builder. Term guy invested $100K plus over 30 years, and at 9%, that is about $680K to $720K depending on market. Same monthly out of pocket. Same death benefit for 30 years when his kids actually needed it. One guy has $160K locked up with loan rules. The other guy has $700K liquid that he owns free and clear. That $540K difference buys a house outright in a lot of states in America. That difference is your kid's college paid for. That difference is you retiring 10 years earlier and telling your boss to kick rocks. Math does not care about feelings. Math does not care about what your uncle who sells insurance told you at the barbecue. Math is math. And math says term plus investing wins by a landslide every single time over a long period. Secret number 6. Whole life is extra terrible for micro business owners, freelancers, self-employed people, gig workers, and nobody talks about this in America. When you run a micro business, cash flow is oxygen. You need cash liquid and flexible and ready to move. Whole life is the opposite. It is illiquid and rigid and slow. You need $6 grand for inventory or a new trailer or Facebook ads that actually bring you clients or to cover a slow month in January. When nobody is spending in America because everybody is broke from Christmas, you cannot just get your cash value instantly. You have to request a loan, fill out forms, wait days, pay interest. If you miss a premium because business was slow, your policy can lapse and you lose a huge chunk of what you put in, and your family loses coverage. That is terrifying when your income goes up and down every month. Term is cheap and stable. $32 a month is nothing, even in a bad month. Your investment account is fully liquid. Need $8 grand for an emergency. Sell $8 grand of index funds. Money in your bank in 2 days. No questions asked. No interest. No reducing your kid's death benefit. No phone call to an agent who tries to guilt trip you. Plus, think about opportunity cost, which is a fancy way of saying what else could you do with that money to grow your business. That $380 whole life premium could be $380 of Google ads that brings you 5 new clients a month that each pay you $400. That is $2,000 in revenue from money you were going to lock up at 2%. For a micro business owner, tying up $380 a month in a low return, locked up insurance product is not just a bad investment. It is actively killing your business growth and keeping you small. In America, small business is how regular people actually get rich and create freedom. Whole life puts a brick on your gas pedal and a brick on your brake at the same time, and then charges you for the bricks. Secret number 7. The tax-free for rich people angle is mostly hype for regular middle-class Americans, and you need to understand this before someone sells you a dream. Yes, it is true that ultra-wealthy families in America with 20 million plus net worth and a team of lawyers and CPAs use super fancy overfunded, maximum funded life insurance policies for estate tax planning and passing money to heirs. You are not that family, not yet anyway. You are a family trying to figure out how to pay daycare, which is basically a second mortgage in America. Save for retirement, pay off debt, maybe take a vacation without putting it on a credit card. You already have incredible tax-free and tax-advantaged tools available to every single American citizen, and they are way better. A Roth IRA grows tax-free. You pull it out tax-free at retirement. A 401k or SEP IRA, if you are self-employed, gives you tax deductions now and tax-deferred growth for decades. An HSA, if you have a high-deductible health plan, is triple tax-free. You put money in tax-free, it grows tax-free. You pull it out tax-free for medical expenses, which is going to be huge when you are older. These are real tools built by the United States government for regular people like you and me. They have better returns, lower fees, total control, and no salesman in the middle taking half your money in year 1. Whole life pretends to give you a special tax benefit you already have for free somewhere else, but with worse performance and more restrictions. It is like someone selling you bottled air and telling you it is special tax-free air when you can literally breathe outside for free. Unless you have a massive estate tax problem, which 99% of us do not, you do not need whole life for taxes. You need a Roth IRA and some index funds and some patience. Let me give you one more analogy that hits super hard for my micro business family, because I want this to stick forever. Think of term life like renting a cheap, clean apartment when you are young and broke and hustling hard in America. You know, renting is not forever. You rent cheap so you can save up to buy a house in cash or with a big down payment. That is smart. That is what responsible people do. Whole life is like a shady landlord telling you to sign a 30-year lease on a luxury penthouse for 5 times market rent, and telling you that 10% of your overpriced rent goes into a little piggy bank in the closet that you can borrow from later with interest and fees, and calling that ownership and calling that smart. You would laugh at that landlord and walk away. You would tell all your friends that landlord is a clown. That is whole life. It is overpriced rent with a piggy bank in the closet. Here is my personal stake one more time, because I want you to feel where I am coming from. I grew up seeing hardworking Americans, immigrants who came to this country to build a better life. First-generation business owners, single moms working 2 jobs, get sold this stuff by someone they trusted from church or from the community. They thought they were doing the right thing. They thought they were being smart with money. 5 years later, they have no emergency fund. They have no real investments. They have a policy they cannot afford. And if they cancel, they lose almost everything. It breaks my heart, because these are the people who deserve to win the most. Term plus investing is boring. It is not sexy. No one gets a big commission selling you a $32 term policy and telling you to open a Vanguard account. But boring is what makes you rich in America. Exciting is what makes someone else rich off of you. So here is the final whiteboard picture I want burned into your brain forever. Left side, whole life. You pay $380 a month, you get $500K protection. After 30 years, you paid $136,800, and you have maybe $160K cash value that is locked up with loan rules and surrender charges. Right side, term plus invest. You pay $32 a month for term, $348 a month investing. You get $500K protection for 30 years while your kids need it. After 30 years, you have zero need for insurance because you have $700K plus invested. That is yours, liquid, growing, tax advantage if you used a Roth IRA and brokerage, and you can leave it to your kids and your business and your community. Same monthly bill, same protection during the years that actually matter, 4 to 5 times more money. Total freedom. No middleman. It is is not even close. It has never been close. The only reason this debate exists in America is because one side pays a 10 times bigger commission. And I know some whole life agent is going to be in the comments typing a whole novel about guarantees and dividends and market risk and cash value never goes down. Bro, show me the math. Show me on the whiteboard where 2% guaranteed beats 9% average over 30 years in America. I will wait. You cannot. Because math does not care about your sales script. Math does not care about your fancy suit. If you already own whole life and you are in year 1 or 2, you probably need to cut your losses, get term in place first so your family is protected, then cancel and get your little cash value back and start investing the difference. If you are 5 or 10 years in, do not just rage cancel tomorrow. Get term in place, look at your cash value, look at your surrender charges, look at your annual statement, talk to a fee-only fiduciary who does not sell insurance and does not get a commission, and make a smart exit plan. The best time to fix this was years ago. The second best time is today, and that is okay. You are here now. That is what matters. Now, I want to start a real fight in the comments, and I want to hear from you, especially if you are outside the United States and your country does insurance differently. If term plus investing the difference leaves a regular hard-working American family with 4 to 6 times more money and the exact same protection during the years their kids actually need it, why do you think the insurance industry in America still pushes whole life so hard on young families and micro business owners? Is it just slick sales tactics, fear-based marketing, and giant commissions? Or is there actually a legit reason I am missing that makes whole life worth it for a regular middle-class family trying to build wealth in America? Drop your take below. I read every single comment. Let us debate it. I'm not scared. And if you got value from this whiteboard breakdown, do me a huge favor and hit that subscribe button and ring that bell, because you are not going to want to miss what is coming next. We are kicking off a brand new series on this channel that is pure free money, and it is perfect for micro business owners who want to stack cash fast without more clients and without more work. It is called Bank Account Bonuses Stack: How to Make $3,000 in 90 days just by opening bank accounts. No scams, no credit card debt, no selling your soul. Just banks in America literally paying you $200, $300, $500 to open an account, and we are going to stack $3,000 in 90 days step by step. I will show you every bank, every bonus, every trick to avoid fees, every deadline, whiteboard style, so you can do it too. Subscribe right now so you do not miss episode 1 of the Bank Account Bonuses Stack series. Let us get this money together and let us build real wealth the boring way that actually works. I will see you in the next one.